YouTube. Hey everyone, welcome back to this channel. This is the Accelerated Forex. In our previous video, we spoke about fair value gaps, which is a concept used so much in ICT and smart money concepts. If you haven't watched that video on this channel, check out the link or check out this video. Maybe leave the link to this video in the description below. You can check it out and learn a lot from it. In this video, we will be learning about order blocks and how to identify them, the different types of order blocks, and the significance of knowing this concept. So let's get right into the video. What is an order block? What is an order block? An order block is an area in the market or an area in price where huge transactions take place. So a lot of orders take place at order blocks. It is popularly known as areas where institutions or banks place their orders. So because of this, we traders say we are trading like the banks when we trade these order blocks or when we trade this kind of concept. How do you identify order blocks? An order block is identified by the last opposite candle that appears before a huge move in a particular direction. So it is literally the opposite candle that is normally followed by two or more same candlesticks or candlesticks that are the same. 3 or more candlesticks are better for me. What are the different types of order blocks? There are two main types of order blocks. We have the bullish order blocks and the bearish order blocks. The bullish order blocks are the last opposite candles that lead to a strong bull run or an upward movement. These are some examples of bullish order blocks. So you can see that in this particular example, there is this red candle here that's from there. That's the last red candle. And right after this red candle, we have at least 2 or 3 green candlesticks following it. They have huge sizes, or they look quite huge. I'll explain much about that later in future videos. So we are seeing a red candlestick here with green candlesticks that are flowing right after. That is an example of bullish order blocks. Let me show you some more examples of bullish order blocks. So you can see here that this is also another example of bullish order blocks. Now let's move to bearish order blocks. So what's a bearish order block? Bearish order block is the last opposite candle that leads to a strong bear run or a downward movement. So just like the bullish order block, this is simply an opposite of it. Simply an opposite of the bullish order block. So you have a bearish order block. You can see there is a nice green candle here before the sharp movement in the downward direction. So you can see the way the candlesticks are moving with huge momentum to the downside. Yeah, that's an example of bearish order blocks. Let me show you some more examples of bearish order blocks. So this is another example here. This is another example of a bearish order block. So now, why do we need to know order blocks? Why do we need to know order blocks? Order blocks help us develop strategies in predicting the next direction of the market. So you can use order block as an entry reason, or you can add it to your confluence of ideas around your own strategy. So you can add it to your strategy to help increase your win rate. Okay, so order blocks are very important concept that you can add to your strategies, or you can use as entry strategies to adapt to your main strategy just to increase your winning rate and make it more profitable. Let's look at some examples. These are some examples where order blocks were applied here. You realize that anytime the candlesticks move towards a direction, they came down, boom. Okay, So that is how important order blocks are. In future videos, I'll teach you how to build some more reliable strategies around order blocks and some other important concepts using ideas that we have taught right here on this channel. Thank you for watching this video to the end. In our next video, we'll talk about market structure. We'll talk about change of character. We'll talk about market structure shift or break of structure and any other similar or related concepts. I made a previous video talking about the Alpha Capital Group. The Alpha Capital Group, this is a prop firm that was giving out free 5k account challenge to all users who sign up and verify the account. So I got my account here. As you can see, I got my account here. I signed up and I also verified and I made a video on it. I got my account here. I have my account here. The account it has no end date. It is unlimited number of days. So I have up to infinity number of days to complete this challenge. The account is a $5,000 account, as you can see. I have a minimum of 3 days, 3 trading days. I have to trade at least 3 days, okay? And my profit target for this account in order to pass this challenge is $400, which is 8% on the account, 8% on 5k, and a maximum loss. I can lose only 10% of this account. I can lose only 10%, which is $500, as you can see here. Also, a maximum daily loss. In a day, I can lose only 5%, which is $250. I can lose only 5% on this challenge. Okay, so from this month of January, I'll be trading this challenge account with you right here on this channel. I'll be sharing my journey right here with you. You will see all my wins and you will see all my losses. I have a very simple trading plan for this challenge. I have a very simple trading plan for this challenge. I don't want to complicate things. This is my trading rule, or these are my trading rules and plans for this challenge. I'll take only 1% risk per position, or 1% risk on each trade. I want to take only 1% risk on each trade. The second rule is that I'll target only 1:2 risk to reward ratio. I'll target only 1:2 risk to reward ratio, but I must break even at 1:1 risk to reward. I will always break even on the trade at 1:1 risk to reward ratio. The third rule is that I'll take a maximum of 2 trades per day, maximum of 2 trades, whether I make 2 wins, whether I make 2 losses, whether I make a win and a loss. I'm taking only 2 trades per day. The fourth rule is that a maximum of 4 losses in a week. Within a week, I want to lose only 4 trades. I want to lose only 4 trades in a week. The last rule is that I am allowed to scale in on my winning trades, but I must break even. I am allowed to scale in on my winning trades. In that case, I wouldn't be targeting 1:2. In that case, I am allowed to target any area I want to target, but I will stick to 1:2 as much as possible. So the last rule makes this plan a bit flexible. It makes it a bit flexible, but I'll try to stick to 1:2 as much as possible. So if you really want to follow this challenge, subscribe to this channel. I'll be with you throughout the journey from this month of January until I pass this challenge or I lose this challenge. This will help you know the reality in trading. This will help you know how realistic this is and the ups and downs in trading. Thank you so much for watching this video. I'll see you in the next video.